Welcome to the Trading Market Technicals morning call video for Friday, February 14th. Crazy price action yesterday in the marketplace. Dow Jones up 63, Nasdaq up 39, S&P up 10.5, Russell up 15. Russell really actually led the way. It is one of our leaders in the indices that we follow. But crazy price action. At one point in time, we were down about 10.5 handles in the E-mini S&P in the overnight session, gapped lower, and totally reversed and just rallied pretty much most of the day and into the close. So really, really crazy price action. Have to be really quick and nimble in these markets at the moment. It definitely caught me off guard, that's for sure. Want to concentrate on a few indicators, but mostly just the indices tonight. Looking to see what to expect going into next week. Now, we are still at an area where we can roll over now. We're still at that 78.6 retracement in the E-mini S&P, the S&P contract. So I'm going to show that to you where we possibly could roll over. But this was a great case in point where I said, you know, if you're looking to short some, you don't short it just because price is there. And sure enough, if you came into the previous day, we got a sell signal that afternoon. If you were swing trading it, you would have made money because you would have took them off. Down 10 handles was a gift. But if you weren't, you have to wait for that signal. You have to wait for that retracement rally, as I was. And the retracement rally turned into a full-fledged uptrend for the day and never gave an entry to get short. So entries are very important. So please, you have to really notice that you just can't short something because price is there. You need a trigger. You need markets to roll over. Whatever the plan that you have as far as triggers, you need to follow it. That's for sure. Okay, so couple of good things, couple of real interesting developments here. Now we're still at these areas where the markets could roll over. Also, remember, markets could just continue to grind higher as it has been pretty much of the last year and a half. But the ticks are actually confirming what we have, what we saw in the last 6-7 trading days. Ticks are well above zero, holding above zero, and as you can see, every time it pops below that 200, hits that 200, it runs right back up again. So ticks are absolutely confirming what the markets are doing. Now, the McClellan oscillator is getting interesting here. Now, yes, we are still within the neutral zone, but you know, another 2 or 3 day pop up, we could be in overbought territory that's where you need to really be careful because, as you can see, it's a very reliable indicator of reading overbought and oversold state in the marketplace. So I'd be looking for a push up. Now, today is Friday, right? We're coming into a long weekend. You know, if you look at the Trader's Almanac, and I like to look at seasonality trends, it actually states that, I mentioned yesterday, that we come into some weakness before the holidays 75% of the time for the last 25 years. That does not have to happen. I mean, it's something to keep an eye on, but you have to follow what price and volume are doing for that day. Usually on a Friday, it is a positive bullish sign, meaning that we get a lot of bullish momentum on Fridays. I don't know why, but it's just, especially with the storm that happened yesterday, probably people taking today off as well. Lack of volume means upward price movement. It's just the way it is. When you don't have sellers pushing price down, the path of least resistance is always up when you have low volume days. You never want to short a dull market, you know. So that's why I think that, if anything, we'd probably continued rally, or even just kind of be subdued and just kind of stay right up, you know, plus or minus 20, 30 points. I don't think we would get any type of big sell-off today. Now, we can, and if that does happen, remember, light volume moves are exaggerated, so that could happen as well. But I'm not looking for that. I'm looking for sideways consolidation, maybe a small move up in the markets today. Remember, anything can happen, so you have to be ready for that. But if we do get that push-up, maybe today, Monday, look for some sort of a pullback in the coming sessions, and we are into resistance too as well. Okay, stocks above the 50-day moving average. Take a look at this. We're back up to this area here where we would get some sort of a market pullback again. So we've had 6-7 explosive days up. Markets are tired. You could definitely see it in some of the stocks. But the indexes are what's really moving. It's really kicking. I mean, at one point I'm looking at all the indexes are making new highs, and some of these stocks, I mean, we're talking high flyers, not really doing anything. I'm like, can't imagine that, but it does happen. You know, people flock to the indexes. The traders and money managers just go and flock to the indexes. So anyway, big movement up in here. We're at the 60 percentile. So another reason just to be cautious, and we're at these extensions. Okay, let's take a look at the VIX. The one thing the VIX is doing is confirming the move higher, right? Now, we just broke down again. We're below the 200. Another push or two lower, we could be back down to this 12 and a half, 13. But we see the Bollinger Bands here has a lot of work to do before it starts to pinch like this. So, really not telling us anything that there's any fear. Obviously, there isn't. We have extreme complacency in the marketplace as well. And as a contrarian, you would take that as a red flag. But again, the thing is right now is telling us that we got plenty of move to run to the downside before we catch any type of real base here. So a good gauge for the bulls, saying that we could have a little bit more upside. All right, now just quickly on China, on the emerging markets, this actually holding up okay, but again, you can see clearly it's in a downtrend. And this could open up the doors for further selling as well. So this, you want to definitely keep an eye on the EEM ETF for the emerging markets and the FXI for China. Can't get above this horizontal trend line, which also coincides well with the 200-day moving average. And the 50 starting to come down as well, making that death cross. So I do think that China is going to be the canary in a coal mine. I've always thought so last year. But China is a very good manipulator of their economic numbers. So, you got to take that with a grain of salt as well. All right, but again, watch these two ETFs at the end of the day and see what's going on with them, because they will give you some clues as to what's happening here and what's maybe some foreshadowing in the marketplace. All right, now here's a problem here. What I see, and again, you day trading, just take it in the back burner. But you can see the yen really didn't sell off on that move up. We are still outside this bullish falling wedge. Yes, we do have a Fibonacci cluster here. We have some retracements and extensions that were stuck underneath. But if that breaks out, you have to be very careful here, because that's when the market, when you can see some selling pressure start to come in again. And if you don't have the spot yen, you can look at the dollar yen as well, or the yen ETF. If you don't have the feed. But this is something that's concerning me. And then you have gold and the precious metal running higher with the markets, and it's just very odd that's basically happening. And right now, you have silver up 2.5%, and you have gold up $12 today in the pre-market session. So just very weird price action. What's supposed to be correlated, inversely correlated, are just not happening at the moment, and that can happen. So you have to just take everything with a grain of salt and watch. But you have to see there's a reason for that. That's what's making me real cautious here. Again, cautious bull, and I don't mind taking long setups, but I have to really be careful here. And this is the area where we're still at that 1820. We have that 78.6% retracement here off the low, and this is still good to me. Remember, we need a trigger now, so it's going to need a little bit more work, because we alleviated some of that downside pressure from here where we had our move lower, and we opened lower here. We were down, like I said, 1802. It's over 10 handles, and literally at the opening we reversed and never saw the low again. So there are definitely some buyers of dips coming in place here. So this is where I'm using a little bit of caution, okay, to be, carrying longs, quality longs. If you're swing trading, sure, but if you're looking just for, a day-to-day swing trade on the overnight, I wouldn't get too crazy doing that, because anything could happen here. Now, obviously, we're down only 50 cents, so it's pretty much subdued last night. It was very quiet in the overnight session. However, things could change real quickly, so remember that, guys, okay? Let's take a look at the charts that I have here. Now, you can see bonds are doing its thing, right, as S&P moves higher. We have TLT moving lower. That's great, but look at what's happening with gold. Gold is breaking out here. So, gold, is that risk, safety trade, that safe haven trade happening? Maybe a precursor of what's to come? I don't know, but, I'm not a forecaster, but this is something that's a little nerve-wracking to me. I'd like to see gold and bonds move lower where risk correlated assets move higher. That's not the case here. So something, again, just to keep an eye on. You want to be fully rounded on what you're trading, on what you're doing. Even though you trade in equity markets, you want to know what's going on with Europe. You want to know what's going on with the DAX. DAX a big leader in Europe, and you want to know what's happening with them, right? You want to know what's happening with the Forex markets, what's correlated with equities. And that's the case, is yen is inversely correlated. Dollar yen is correlated with equity. So you want to just really watch what happens, because they give you clues as to possibly what might be happening down the road. Okay, we have the spiders. Now, the spiders here did very well, as you can see. But again, look at the volume. The volume is very anemic. There's no volume at all the last few days. Other than we have 2 days out of the 7-8 trading days we had. Now we're back up. We did cross back above zero in the histograms, so everything is looking quite bullish. And can we test the highs? Absolutely, we can. It's only $2 away. We could definitely test the highs here, and then we would reevaluate it. But again, because we're looking for a pullback at these levels, that does not mean to go out and short the market. We want a reversal. We want the markets to start making lower lows and lower highs, and we want our moving averages to start pointing in that direction on the shorter term time frame before we could look to get short. Other than that, you're shorting into a freight train here, so we don't want to be doing that. At the moment, we have bullish symmetry as we're moving up, but we are running into resistance, so you just need to be cautious about that. Transports, a little bit of a lagger. Now, I'm a little bit concerned about that. This is our leader. We do have better price action, right? Volume actually was much better than the previous day, but we're still below the 20. We're just barely above the 50. And this is, I like to see the leader lead, and this is not leading at the moment. However, Russell led the way yesterday in a big way, but look at the volume. Volume really wasn't there. It's just very, very odd how volume hasn't been much on these large moves. Now, we did have a big, large engulfing green candle. Good sign. We finally broke above the 20 and the 50. Very good sign. Bollinger Bands are starting to pinch, telling us energy starting to build again. Can we move higher? Absolutely. Russell was clearly the leader of the 5 indices that you follow, and I truly encourage you to stack up the transports, the Russell, the Qs, the spiders, the Dow Jones Industrial Average, and also on a side note, put some sort of either the yen ETF, the yen, spot yen, or the dollar yen. Put that in one little montage and watch that during the day, and you could clearly see, if you have not looking at anything else, look at what's happening in the internals, and they'll tell you that risk is on, all right? Add the VIX, the vol spread, and the tick, and you got yourself something really valuable here that you can trade intraday with. Anyway, IWM's big move up, so I do like the fact that you know, the markets aren't afraid to buy this dip, okay? And look at the Qs, fantastic. I mean, we had some big movement in the Qs yesterday. Qs are just out of control strong. We have a lot of good movement in Apple. So, you know, there's nothing wrong with the Q, nothing wrong with the market. It's just, again, we're coming into these resistance areas. Now, volume is a little bit weak as well, and we are starting to look a little tired and look overbought. That doesn't mean we look to short the market, but we want to really be aware of our surroundings and say, okay, you know, do I want to add to longs? Want to take on a lot of long trades? If you are swing trading, no, absolutely not. We want to wait for pullbacks, and we want to buy into support, some good quality stocks. And lastly is the Dow Jones. Okay, now the Dow Jones is the weakest of the 5, as you can clearly see. We're above the 20, but we're below the 50. And as you can see here, volume is just there's no volume at all in the Dow Jones. So another problem child here that we'd like to see and break back above. Okay, so watch the indices, guys. It's going to give you some good clues along with some of the indicators that I mentioned today in the video. That'll give you a good insight of what's to come. Remember, today is Friday. We did get additional 2 to 3 inches in the East Coast here. So I would suggest that a lot of traders, bigger guys, are staying home today as well as yesterday. That gives us lack of volume, and lack of volume should mean higher prices, okay? Now, if something is mentioned or whatever the case may be, obviously news will trump the charts, so just be aware of that, all right? As you know, markets are closed for President's Day on Monday, so we will return with a full report on Tuesday. Have a great long weekend, get a lot of rest. Should be real interesting in the coming weeks and the next couple of weeks here in February. Have a great day. Enjoy the weekend, guys.